Time now for business. Kate Moody's here. There's been a lot of turmoil on Wall Street over the last week. Today, signs that tighter regulations could be in store.
At least discussions about tighter regulations, of course, Mark. This after the U.S. Treasury Secretary Janet Yellen called a meeting of market and financial officials to discuss the trading frenzy of the last 10 days. The heads of the U.S. Securities and Exchange Commission and Federal Reserve are among those who've been summoned for talks at some point this week to examine whether trade has been consistent with fair and efficient markets. There's speculation they could begin talks on tighter regulations, in particular of online brokerage platforms like Robinhood, which restricted trade of GameStop shares during their meteoric rise last week. Amateur traders had been pouring money into shares of that struggling video game chain in a coordinated effort to squeeze big hedge funds who had bet against the company's fortunes. The stock has erased over half of those gains this week. It closed about 2% up in a choppy session today. Richard Smith, the longtime market watcher and CEO of the Foundation for the Study of Cycles, told me that this could be a turning point. Take a listen.
There are changes in the game going on, and yet I think there's a lot of things going on behind the scene that definitely merit closer scrutiny in terms of healthy capital markets going forward and also a healthy place for the retail investor in the capital markets.
Do you agree with the characterization of last week's trade turmoil as sort of a David and Goliath battle? And do you think we should be prepared to see more of the same?
You know, I do think there's a David and Goliath component to it. I think that the early investors in GameStop did some really smart things. I think they understood very deeply how the markets work and how hedge funds work. And they played the game exquisitely according to the rules of the street. My concern is more for the few million participants that came into the game quite late. And I think that they're going to end up, holding the bag. And so I think that, it was impressive, and I sympathize with the David versus Goliath narrative. But I think it's got some gaps.
Let's check in on the rest of the day's trading action now. Pretty muted close for Wall Street. The Nasdaq paring back its earlier gains to close slightly lower there. The Dow Jones and S&P 500 only slightly above the flat line. Shares of Google's parent company Alphabet ended 7% higher after it reported 23% revenue growth driven by its online advertising business. A flat close for stocks in London and Paris. The DAX up 0.7% in Frankfurt. Stocks in Milan jumped 2% on optimism that the former ECB president Mario Draghi will be able to form a new unity government in Italy. U.S. President Joe Biden expects some Republican support for his COVID stimulus package, but said he will push ahead regardless, and he urged his party to stick together. He and Vice President Kamala Harris met with top Democratic lawmakers just 2 days after a group of moderate Republicans pitched their own stimulus bill worth around $600 billion. Biden's proposal would hit $1.9 trillion, including $1,400 stimulus checks, support for vaccination programs and school reopenings, and money for local and state governments. Senate Majority Leader Chuck Schumer said there was universal agreement among Democrats for their own package. Take a listen.
We hope our Republican colleagues will join us in that big, bold program that America needs. The vast majority of Republican voters support large parts of the program. We want to do it bipartisan, but we must be strong. We cannot dawdle, we cannot delay, we cannot dilute, because the troubles that this nation has and the opportunities that we can bring them are so large.
The man who founded and built the e-commerce giant Amazon and became the world's richest man in the process is stepping down from his position as chief executive officer. Jeff Bezos is handing over the reins of the booming business to Andy Jassy, who's the head of Amazon's cloud services. Revenue at Amazon has soared during the pandemic, up 44% in the last 3 months of 2020 alone. Earlier, I spoke to Benoit Berthelot, journalist at Capital Magazine and author of a book called The World According to Amazon. He said Bezos will continue to be hands-on, but that the choice of replacement is indicative of the company's priorities.
He's very much inside the veins of Andy Jassy, the man who will continue to lead the company. So we won't see a big change, I think, in terms of leadership, management, kind, or even strategy. He's really a man that worked with Bezos for a very long time now, more than 20 years. He was there at the beginning of Amazon, but he created at Amazon the most successful business of all the businesses of Amazon, because the cloud is the first stream of revenue for Amazon now. It gets the most cash from the cloud, and obviously, it's an indication that Amazon is before all a tech company and will be even more in the future. AI, Alexa, the drones, the surveillance systems, like the face recognition, for example, are big businesses for Amazon. And they are all overseen by Amazon Web Services. So now that Jassy will be the boss, it's a reminder that Amazon is not a retail company. It's really, at its core, a tech company.
The spread of new variants of the coronavirus is likely to hamper recovery in a number of sectors, including air travel. An industry group confirmed that passenger numbers plunged an unprecedented 66% last year, as Ellen Gainsford reports.
It's been a devastating 12 months for airlines. The aviation industry has been hard hit by the COVID crisis. Global passenger traffic plunged by 66% in 2020, with international travel down by 76% and domestic travel by 49%. With planes grounded globally, more than 40 companies went bankrupt. Among them are several regional carriers, including the British airline Flybe, the American Trans-States Airlines, and Cathay Dragon. Large carriers have also been affected by the crisis. In the US, Delta Airlines lost more than $12 billion, and American Airlines nearly $9 billion, while Japan Airlines saw losses of nearly $3 billion. After this unprecedented year, many airlines have been forced to slash jobs, and there could be more to come. American and United Airlines are threatening to cut 32,000 posts. Air France has already let 7,500 workers go, but for the moment doesn't envisage further layoffs. There had been hopes 2021 could be the beginning of the end of this crisis, but a report by IATA has poured cold water over that optimism. As new variants of the virus continue to be discovered, the International Aviation Association predicts traffic won't return to normal until at least 2023 or 2024, and that airlines will need a further $70 to $80 billion in aid to survive the coronavirus crisis.
Mark, that's all for now.
Kate, as ever, thank you very much indeed. Kate Moody with all the business.